Welcome to the Tax Saving Minute. This is the show that teaches you how income taxes work in little bite-sized pieces so you can learn how to save money on your taxes. In Season 3, Freelancer Tax Freedom, we're talking about how you can save money on your taxes if you own your own business. If you haven't seen the other episodes in this season, I recommend them. Click on the links below so you don't miss out. And also, if you don't want to miss out on future episodes, subscribe to this channel and like this video. Today, we're going to talk about how to avoid penalties for not paying enough estimated tax and to avoid penalties of paying your tax late. So, you used to be an employee, and when you got paid every 2 weeks, your employer used to take out federal income tax from your paycheck and give it to the government. It was a seamless thing, you never had to worry about it, and then at the end of the year when you filed your tax return, you just paid whatever was left over. But now you own your own business and you don't have an employer to seamlessly take out that federal income tax on your behalf. So what do? There is something called estimated tax payments. These are quarterly payments that are calculated based on your prior year tax return, where you can pay the IRS throughout the year on your own behalf. So how does that work? Well, for 2020, you would get payments calculated on your 2019 tax return. There will be little estimated tax payment vouchers that will be calculated with that return. And then each quarter, you send that in with a check to the IRS. And then when April 15th rolls around, you calculate your actual taxes that you owe, since you now know what that is, and you pay whatever's left over. And if you do that, you're good. You won't have the penalties for not paying enough estimated tax or the late payment penalty for not paying enough tax by April 15th, which is bigger, by the way. So that's what I recommend. Pay your estimated tax payments and then pay all the tax you owe, or at least 90%, by April 15th. One exception, you don't have to pay estimated tax payments if you didn't owe any tax last year. Now, I'm not saying if you got a refund, because you might have owed tax, but if you didn't owe any tax, then the calculation will be based on zero, and so you don't have to pay any estimated tax. Now, how do you avoid backup withholding? What is backup withholding, and how do you fill out a W-9? Well, join Erin next time in episode 10 to find out. Thank you for joining me for the Tax Saving Minute. If you have questions or comments, please comment below. I'm Cynthia Umstadt, CPA. See you next time.